Hello traders, my name is Christopher Vecchio, currency analyst with Daily FX. Today is Friday, March 7th, 2014. Happy NFP Day as we turn the page to the North American trading session, and we're getting geared up for this NFP report due at 8:30 Eastern, 13:30 GMT. We actually see that the US dollar and the Japanese yen are the two weakest performers over the last rolling 24-hour period. Using the strong weak app here as a momentum filter, we actually see on the 4-hour chart as well that the dollar and yen are weakening. Yen is really underperforming against the euro, against the Australian dollar, and so going into today, we see that the dollar yen is in fact trying to decide whether or not this break above 103 is legitimate. But while the dollar yen decides while this break above 103 is legitimate, and we see here that we've finally cleared that former swing high in the downtrend, that 102.90-95 level that we've been looking for to re-engage longs, the US dollar situation elsewhere is a little more perilous. When we look at the euro dollar, starting to break above that 139 figure, we are through it as I scroll out here. We are through this 138.20 zone, not only a swing high from the end of February, but also swing high from the end of December 2013, coinciding with the descending trend line off of the 2008 and 2011 highs. And so right now, if we do get that weak NFP print, the dollar could be looking at a real poor technical pattern that could lead to further weakness. It's not just against the euro, but it's also against currencies like the Australian dollar that we're looking at for further dollar weakness. This inverse head and shoulders pattern that we've been watching for the past few weeks, we were finally triggered on yesterday, taking longs at 90.90. We are looking for further gains up towards, if this measured move is going to hold, up towards that 95 area. That's where the 100% extension of this measured move from the head to neckline would go to. And so right now, the US dollar is in a situation where technically it's looking a little bit weaker. So with this NFP print due today, we have 150K expected from 113K, 6.6% unemployment rate. Those numbers are going to be very important for various reasons. For example, if the unemployment rate ticks higher, but it's because the participation rate's going up, that might be considered a positive. If the unemployment rate falls because the participation rate's falling, simply put, there are fewer Americans in the workplace and more or less it's just fancy accounting, that's not a really good sign that the unemployment rate's falling. Ultimately, that NFP figure headline is going to be pretty important. We're looking at the ADP print coming in at 139K. We looked at the ISM Services Employment Subindex yesterday and its historical relationship with NFPs. Since 2001, ISM Services Employment have held a 0.75 correlation overall. The past month's 47.5 print would indicate somewhere around a minus 75.7K based on historical averages. But we're not looking that low. We do think a weak print under 140 is expected, and at this point in time, anything that is better than that could start to provoke that US dollar reversal. Right now, retail traders are exceptionally short the US dollar. In fact, a look at our speculative sentiment index shows that they've never been shorter. That SSI report will be released at 8 Eastern, 1300 GMT, so you'll have a chance to look at it before this NFP report. My colleague David Rodriguez will be covering the NFP report live beginning at 8:15 Eastern, 13:15 GMT in Daily FX Plus. I encourage you to come out there. If I don't speak to you before then, good luck trading today. We'll be back this afternoon with a video update, and of course, have a great weekend.